You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to the 10 Bagger Podcast. This is episode number 8, and today I'm speaking with Justin Huhn. He is the Uranium Insider. You can find him on Twitter at UraniumInsider, and he's going to tell us why the outlook for uranium over the coming years is very bullish, and if that comes to pass, then there should be some 10 baggers in that space. So it'll be good to get some information and knowledge about let's call it a niche, because I wouldn't say it's a sector. I mean, it's all part of the commodity sector, but uranium is a special niche. Justin, thank you so much for coming on today. How are you?
I'm doing really well, Jordan. Thanks a lot for having me. It's an honor and a pleasure to be with you today.
Well, it's my pleasure to have you on, because I'm looking forward to talking about something a little bit different from gold stocks, but I still think it's something that most listeners probably have some knowledge about. Most listeners probably follow it to some degree. At least that's where I fit in. First things first, Justin, let's just talk about, give it to me in like a minute or so. If someone had no knowledge about uranium, give me the bull case. If an average person is just walking down the street, and why should they take some money out of their S&P 500 fund or whatever it is and consider or put some of that capital into the uranium space?
All right, so the elevator pitch. So basically, uranium right now is setting up again to have a pretty historical bull market, in my opinion. This market has a history of absolutely bludgeoning investors to death before taking off and doing multi-baggers, just life-changing returns, like from 2004 to 2007. Right now is a really unique period because most of the equities in the uranium space are really beat down, some of them at all-time lows, if not at least at 52-week lows. While we actually have improving fundamentals. So there's a supply-demand picture that's very clear and pretty unanimous as far as having a supply shortfall in the coming years out to the foreseeable future. We have the back end of the fuel cycle all moving positively. I can talk about that more later. And we have the equities moving in the opposite direction. So in my opinion, that's a huge opportunity for a contrarian.
Now, I have one question about a catalyst, but I'll get to that second, because first, something I've noticed is the energy sector as a whole. I mean, oil and gas, historically very, very cheap, relative. There was a 100-year chart floating around on Twitter that I absolutely loved. And relative to the S&P, energy stocks as a whole are historically, and I don't just mean like on a 5 or 10-year basis. Like if you got to go back decades, they're historically in that realm as far as how cheap they are. So at some point, energy is probably going to see capital inflows. I think it's going to be a winner over the coming years. So how is uranium and uranium stocks linked to energy? I mean, is it being hurt by the fact that energy is so cheap and is underperformed? Is it something that could start to wake up when energy starts to wake up? Is there any linkage there?
I believe there's some linkage there. Historically, there's a bit of correlation between oil and uranium. And overall, I think that commodities and value stocks are just completely beat down relative to growth. And I think obviously, these things always move in cycles. So at some point that's going to tip generally, I believe, for pretty much all commodities, or most commodities at least. But the primary driver for the uranium market is the spot price. So like I said, it does have those correlations, but the spot price, generally speaking, is really what drives it, because that's what signals, the returns for the companies that are producing or potentially producing. But the spot price, is actually in an uptrend for the past 3 years. It's languishing well below the cost of production for most producers in the world, with an exception of Kazatomprom and a couple of other low price producers. But really lacking in spot price movement is really, I believe, what's keeping the equities down. Even though it's in an uptrend, we really need to see kind of a blast through $30, $35 I think to really wake up the sector. And right now we're sitting at about 25, just under $26 a pound.
Is there any way we can time when this sector will start moving? I know it's small and it's again a niche sector, but I that's been my issue. I remember looking at this sometime, I think in 2018. I had a basket of the junior stocks that I made, and the chart was looking really bullish, and then eventually it didn't break out and it fell off. And so that's something, as someone who looks at charts, I just and I try and assess fundamentals to where there could be some kind of a catalyst. It just seems tricky to me as far as when this sector might move and time it. Do you have any thoughts on that and like a potential catalyst aside from the uranium price, which you already mentioned?
For sure. Yeah. Timing is really difficult in this market. And kind of, disclaimer, this really is kind of a pure contrarian sort of play. And I think that it's really important to have a certain amount of patience. Timing this market in the short term is a fool's errand. But that said, the past few years when we've seen kind of a bump in the spot price seasonally, 2016, 2017, even last year, we just about hit $30. We still had all of the back end elements of the fuel cycle falling. So one example of that is the SWU price, separative work unit price, which basically represents the cost of enrichment, to just put it really simply. And SWU price had fallen almost in a straight line from 2011. And it turned around last summer, just about 15 months ago, and has gone up in a straight line. And essentially what that signals is there's new demand for enriched uranium. And so we had the spot price moving the past few years kind of up and down, up and down. That's mainly just been on trading volume. So a lot of the spot volume is just from traders. It's arbitrage, making a small amount of money on a large amount of pounds, just trading back and forth. It's not necessarily new uranium coming into the market being sold to an end user. So that's why I believe that price movement has been unsustainable. But now we have SWU price consistently rising, which, like I said, means there's new demand for enriched uranium. We have the cost of UF6, uranium hexafluoride, which is the converted uranium. That's on the move up. Conversion is at an all-time high right now, and part of that is because there's actually a bottleneck in the conversion process on the back end of the fuel supply. But we have all of these metrics, and historically these metrics move first, and they kind of pull the U3O8 up with it. So we're seeing increased demand for EUP, for enriched uranium. We're seeing increased demand for conversion, and it hasn't quite yet trickled down to the spot, to the U3O8. And so what I really think is the primary catalyst here is the contracting cycle. So the way that utilities historically have secured supply for creating their nuclear power is through long-term contracts, let's say 5, 6, 7 to 10 year contracts that are secured with the producers directly. And the last contracting cycle was exactly during the last bull market. We had the mine floods at Cigar and MacArthur. We had a number of catalysts that kind of triggered a panic. And back in that market, we actually didn't even have a deficit, a supply and demand deficit. There was just a perceived deficit because of these events. So we had this mass flood into the, pardon the pun, into the contracting market. And so all of these utilities around the world signed these 7 to 10 year contracts, and production continued to increase. So we had at the same time Kazatomprom just going nuts, increasing their production year over year, and they're still producing a lot. But we had essentially all these contracts signed, many years of oversupply, and those contracts are slowly starting to come off. So we have, let's say, maybe 5 to 10% of U.S. utilities are nearing being uncovered with contracts. And the utilities, they might go into the spot market to sort of see if they can acquire some pounds to sort of buffer their inventory, because there's been such abundant, cheap spot uranium for so long. But we know now that Kazatomprom is no longer selling into the spot market, and there's only a few consistent sources of spot uranium. So we generally believe that the spot market is thin, but the demand has not showed up very in much volume in the spot market. So really long story short, the general catalyst is the upcoming contracting cycle. And I believe that what's going to happen is, let's say over the next year, and I really don't like to put timeframes on this because I do see this as a 3 to 5 or more year investment or speculation. But I believe that the spot market is going to thin out. And as soon as we have enough volume to actually tip that demand supply ratio in the spot market, spot moves up, and that's going to start triggering some utilities to contract. And on just one more note on that, it's the big catalyst for the contracting cycle is that over the next, let's say 5 years, we've got more than a couple hundred reactors that are going to be signing contracts. So we're looking at potentially up to 1 billion pounds of uranium, let's say over a 5-year period, that needs to go into contracts. And we don't have that much on offer. We've got, let's say, less than 500 million pounds available coming from Kazatomprom out into the future for 10-year contracts. And we've got McArthur River. And there's a couple of other small players, but pretty much all of the new projects need much higher prices. So we've got, let's say, 500-600 million pounds in the less than $50 a pound range. After that, we need much higher prices to incentivize production that is going to have to come online to meet that growing demand. So I hope that wasn't too rambling, but that's kind of the overall picture that I'm seeing here.
No, that's great. And one question I have is the Section 232 thing where Trump declined to impose quotas or other measures on uranium imports. I know that was bad news for the sector. It seemed people were anticipating that. So is there how significant is that to you? What's the fallout exactly? Give us some analysis on that decision and how it impacted the market.
It certainly has had an impact on the market, although I do believe that Trump probably made a good decision in not implementing quotas. Honestly, the market recovering in general over time is going to be good for all producers, including the U.S. producers. So, a lot of the industry folk are not too happy with the 232 petition because it's sort of inhibited the market from just operating in a quote unquote natural manner. But what Trump did do was implement this nuclear fuel working group. So he turned down the quota idea, but he said, I recognize that there's some issues here with domestic production. Let's go ahead and look into it deeper and address it and see what we can figure out. I really don't have any predictions on this. There was a leak recently that came from Bloomberg of one of the recommendations from the working group, which is that the U.S. government becomes a buyer of uranium from the Department of Defense, Department of Energy, which would have to come from domestic production. So I think that if I had to bet, I would say that I believe something positive will come from it, but I don't know on the timing. Everybody's been waiting. When I say the investing sector has been waiting for this to just pass so that we can all move on. But I do believe, what I've recommended to my newsletter is just have some exposure to the U.S., to the best U.S. equities for this, just in case there is something positive. And if there isn't something positive, I don't know how much more they can sell off. It's just been so bloody for the whole market. And once it passes, some normalcy can return, and we're expecting there to be some improved spot market action, things like that once it passes.
Is that a big reason why the uranium stocks have just performed poorly this year?
Well, it's certainly been a big reason for the U.S. equities because there was so much speculation on 232. There were a lot of short-term traders that came into the space expecting a big pop in, energy fuels, Energy, the rest of the smaller players in the U.S. and they got hit really hard after that quota was denied by President Trump. So I think that's been one reason, and there are a lot of traders and speculators that are that are investing or trading around this potential catalyst. And it's not something that I would suggest because it's so difficult to time and nobody really knows what the outcome is going to be. But yeah, I would say it has had an influence on it for sure.
So with that said, I mean, let's talk about the companies, and I mean, we don't have to mention every company, but with all this being said, what are some of the things that first let's talk about that. What are some of the things that we should all be looking for, the traits of these uranium companies? I mean, is it a producer? Is it someone who has lots of pounds in the ground, share structure, cash, etc.? I mean, what are the things that you're looking for? What's important to you in buying a uranium stock to capitalize on what's coming?
Sure. Yeah, I guess considering this is the 10 Bagger podcast, I generally look at juniors. And so because the market, like I said, is difficult to time in the short term, and equity is relatively thin out there for junior mining companies in general, at least shareholder equity. I think it's really important to focus on G&A expenses and dilution when it comes to the juniors. Most of these companies in the junior mining sector are just kind of famous for producing nothing and diluting shareholders to fund their operations and their salaries and all of that. So I strongly suggest to look deeply into the fundamentals and look into the financials. And so my favorite juniors are ones that have really experienced management who's historically have provided greatly for shareholders and are currently respecting shareholders in doing very minimal dilutions, very minimal capital raises, looking at the overall G&A expenses and the cash burn. Some of these kind of mid to larger cap uranium companies that have really great assets are burning so much cash, it's just unbelievable. I don't want to mention any names, but some of the big kind of darlings of the sector are burning incredible amounts of cash, and a good chunk of that is on salaries, and they're just producing nothing, and they're many years away from production. So I stay away from those. But there are some juniors out there.
Well, sorry to interrupt you. Feel free to name names if you like.
All right, I'll name one name. Okay, so NextGen is a company that obviously has an unbelievably incredible deposit. It's by far the best, largest undeveloped uranium deposit in the world, and it will be a mine. I believe that it will be a mine someday. I don't know if it's going to get into production this cycle. Depends on how quickly it moves and how long the cycle lasts. The last one was just such a violent spike that very few new projects even came online because it happened so quickly. But NextGen, this is not necessarily a suggestion against investing in this company, because I think that it's a larger market cap. It has good liquidity. It's a good one for funds and ETFs. It's something to just kind of buy a chunk and ignore it, because when the market moves, I have no doubt that it will. But what bothers me is we're looking at they're going to burn $60 million this year. And they've advanced their deposit. They continue to drill and prove out more pounds, which is, that's bringing some value to shareholders. But, 10 million of that 60 million is salaries and bonuses and options grants. And I have a hard time with that. I just don't feel that's very respectful to shareholders. It's not justified, in my opinion. So I don't really mean to badmouth the company, because I do think, honestly, that's the best deposit out there, and it probably will be developed. But I have a hard time with that type of cash burn being so far away from production. But yeah, so I mean, as far as upside potential, that's really what I've focused on for my own investments and for my newsletters, the juniors, because I think the potential is just unbelievable, and there's very few out there that are really keeping it conservative financially, while at the same time having a good amount of let's say hunger to kind of acquire assets or strike when the iron is hot eventually.
Would you be willing to name one and share a potential 10-bagger?
Yeah, actually, one that I've been looking at recently is Forum Energy Metals. So this is a company that right now is trading, I believe it's around $4 million US market cap. To be fair, they've essentially done, they haven't done much for the past decade, but for the past couple of years, they've made some really interesting and intelligent moves. They have staked some properties in Saskatchewan, one of them being the Janus Lake project, which is a copper silver project. And they've signed an option agreement with Rio Tinto, who's done a drill program this year and is resulting in some pretty nice, some pretty nice copper intersections. They've got a really conservative management team. Their G&A expenses are very low. So I like the combination of financial conservatism and making intelligent moves in the sector. So there's some companies that are financially conservative that are sitting on their hands, and while I appreciate that balance between furthering projects intelligently and carefully, being wise with the capital you're raising, and having some good upside potential is really what I'm looking for. Forum they've got a bunch of uranium properties. They've also recently announced an option agreement with Orano to drill one of their projects, which I believe could happen next year. And they also have a nickel project, nickel PGM project in Saskatchewan that looks very promising. So that's one that I'm looking at. And some of these juniors, they don't tick all of the boxes, but at $4 million market cap, it's worth just a little speculation to buy a little chunk and tuck it away in your desk drawer and check it in 5 years.
So would you consider that a uranium company? Because it seems like they're involved in multiple, or exploration of multiple commodity projects.
Right. Yeah. Uranium is not necessarily their focus at the moment, because they've got this pretty killer project with Rio going for copper silver. But they have their geologist, Ken Wheatley, is one of the all-time great uranium geologists in the Athabasca Basin, and one of the reasons Orano chose to JV on this project, the Fur Island uranium project, is to have partnership and cooperation with Ken to actually run the drill program. So they definitely have their fingers in uranium, and it's nice that they've been able to work on these JVs, because I think sometimes companies can get spread thin between multiple projects, multiple different metals. But having those JVs kind of eases that and gives them some cash as well to limit that dilution.
Is there a company that's only uranium that you can share that you like?
Well, I'd like to, out of respect for my newsletter subscribers, maybe not mention specific names in the uranium sector, but I would say the companies that I'm more heavily invested in the junior space for uranium, they're in the US. And it's not because of the 232 thing. There's historical companies that historically have done really, really well in the last cycle. The CEOs I really trust and respect. And so I guess that's a little hint. There's only about a dozen of them.
Sorry to interrupt you. And your newsletter it's a free newsletter, though.
I have a free newsletter and I have a premium newsletter. I have both. So the free newsletter is more just kind of pontification on the sector, commenting on what's going on in the sector that I send out a couple times a month. And then the premium newsletter has my stock picks, and I send out 1 or 2 emails a week just on company updates and things like that.
Okay, so where can we go to? I see on Twitter you have a link to the free newsletter, but I didn't know you had a premium one. So where can we go to subscribe to the premium one?
You can subscribe to both just at UraniumInsider.com. Yeah. And the newsletter link is for the premium newsletter, but on the front page you can sign up for the free newsletter as well. Okay,
and tell us a little bit about the newsletter, like the structure of it and how often you publish and the cost.
Sure. The newsletter it's just under $400 for the year. It's I publish. I say that I publish 2 to 4 times a month, but honestly, it's been more often. I've just been going with what's coming naturally and what needs to be said. So I essentially email when there's news that I feel is worthy to be shared with members. And so what's included is just all of my current stock picks for uranium and a couple of other junior mining sectors that are somewhat related. And then I send out emails. Well, it's been about once to twice a week when things are active. A few months ago, things are not very active. I think I sent maybe 2 emails in September. And then there's ongoing trade ideas. So despite the stock picks that are included with a subscription, I send out trade ideas for new companies as they come to mind.
Okay, well, excellent, Justin. Thank you so much for coming on. I really enjoyed it, and I'm looking forward to following uranium. And when it starts to move, hopefully we all can get in the sector at a slightly higher cost basis than you and your subscribers, and still make some 10 baggers. And so with that
absolutely
said, with that said, we can follow you at UraniumInsider on Twitter and UraniumInsider.com. Lastly, Justin, can you share your email address if our listeners want to contact you personally?
Yeah, sure. My email address is just uraniuminsider@gmail.com. And I'm pretty accessible through email and Twitter. Just if any of your listeners want to reach out, I'm happy to chat and share thoughts. I've really enjoyed dialogue with folks in this sector. It's been really good.
Okay, well, thank you so much for coming on today, Justin. I and my listeners really appreciate it. And when uranium starts moving aggressively, we'll definitely have to have you back.
I look forward to it, Jordan. Thanks a lot. It's been a pleasure.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.